Morning traders, Paul here with Gamma Edge. Today is the 30th of September, Friday, JPM roll day. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Summary for today, we've had a reversion back to an all-cash short-term signal. Failed yesterday. As many of you are aware, we had a one-day long breakout, which was not sustained. As I said, today is the JPM quarterly roll. The 3580 strike is material. If we move below that, we could see the bears really come out in force. That's because the deltas will drive towards a -1 limit. This will impact dealer response. In fact, it may invert it. If we stay above the 3580, 3600 area, we think there will be a business as usual, so it'll be interesting to see how that pans out. We don't know what market on close is going to be, but we are expecting an above normal market sell, probably greater than 5 billion. We'll see. Positive GEX has moved back down to 4,200 from 43. This is the second time this has happened this week, and when that occurs, it typically can show short-term positioning for an upside move on the shortest of durations, but in the longer term, it's bearish. We like to see both minus GEX and plus GEX, which are the short-term gamma levels, dominant gamma levels, move up with the complex, and we're not seeing that. We're actually seeing the reverse of that. And when the complex starts moving south, that's weaker. Liquidity stocks, the Amazon, Apples, etc., are not showing any bullish strength. In fact, they're showing weakness and could be positioning for a short-term drop, and probably want to pay attention to those things also. Taking a look at the cumulative tick model, it's our primary model. We discussed at length if we had a pullback, we had a trajectory. One, if then, that if it pulled back and bounced, that would be good, and you would enter in that scenario. We didn't really get that yesterday. As you can see, we did pull back, we kind of hesitated, and then we drifted low in the afternoon session, ending on the low of the day as far as the cumulative tick is concerned. Now, price did move up into the close. Certainly the last hour or so did show some strength there, but it was not confirmed by the cumulative tick, so this is suspect. We had a couple questions come in about the gap. In general, that gap down is not a reversal of the cumulative tick short-term signal, but of course, if you got in where the equity was in this area and you gap down below it, you're going to be taking some heat. If you can't withstand that heat, you're probably sized too large, and so risk management is the #1 key. If you felt too much heat and you bailed, it worked out for you in this case if you took it off the table right at the gap down at the open. But in the long haul, that's not necessarily a good strategy, and you need to get smaller. Manage your risk so that you can move within either the expected move or the average true range of the equity that you're investing in. Taking a look at the key levels for today, as I said, we had a drop back down to 4,200 for plus GEX. Everything else is remaining the same, the 4,000, the 3,600, and the 3,000. Note the expected move is elevated today, end of quarter. We're going to see some flows come in, obviously, from mutual funds and other ETFs, etc. And then we've got the JPM here, and this 3580 is where we've got 46,700 long puts that are going to get rolled today. Right now, they have a delta of about 27. Nominally, and then knowing that the final destination is going to be around 54, so we're about midpoint where we closed yesterday at 3640. So we're right in the middle of that zone. But as we go through today, whether we get closer and closer to the 3580 or we move away from it will be material, and will impact the end of day values. Looking at the ZeroDTE, obviously with the JPM roll today, it's an extremely large expiry that's coming off the table. And you can see that it's heavily put dominated here. ZeroDTE, we've got the JPM long strike. It's no coincidence that the put open interest dominant for the ZeroDTE is sitting here at the same level that the minus GEX dominant for the ZeroDTE is sitting here. If we do lose below 3580, that could embolden the bears, and we could get some put buying. If we see those puts being opened up, that'll actually drive price further south. So it'll be a combination of events, almost a perfect storm to the downside. So we want to be very cognizant of that. Now to the upside, the 3655, 3660 area is kind of the base of transition. We're not seeing a lot of pressure to push us upward after that. Above the 3710, 3715 area here, you can see that we start moving into that positive gamma or call dominated gamma area. In this area, we're not expecting a lot of contribution, maybe a parking spot here at 3700 and maybe one here at 3660. Not thinking that too much at this point. Not very strong either in the deltas or the gammas at this point for the ZeroDT. So not seeing a lot of contribution in this area from the ZeroDT. We think it's all going to be down from this area and where they end up rolling to. The 1DTE is about the same. Not seeing a huge change. You can see up here at 3780, we've got dominant call open interest expiry for the 1DTE. This is where we are projecting to end on Monday. Same thing with the positive gamma exposure. It dominates here up at 3780. Down here to the downside, 3650. And below that 3650, you can see some key levels here. We do note the pocket here, the 3550, 3555 area. It's a double. When we see that, that usually is supportive, but it also can be, fairly significant as an accelerant if we blow through that. Note though, 1DTE, a lot can happen and will happen between now and the end of day Monday. So don't put a lot of weight in this. Overall, fairly weak in comparison to what we're seeing today. But just something to pay attention to in terms of the structure. Taking a look at the combo complex, the AM and the PM, a lot going on here. So we got over 40% of the SPX gamma is going to retire between now and the October monthly. That's a big deal, and we should pay attention to that. And where that money gets redistributed to is pretty important. Below the 3705, 3710 layer, you can see that we've got heavy put-dominated gamma that's here. And as we move down in price, we could just accelerate to the downside here. Key area that we're watching is this 3600. You can see just an extremely large amount of negative gamma or put-dominated gamma there with a fairly significant delta level, delta notional level here. Below that, we're looking at that 3575, 3580, which is the JPM today. We could hold in that area. We'll see. Come right up to it. If we spit through that, you can see the 3550, and then down here to the downside, the 3500 is going to get larger and larger as puts are opened up. To the upside, very ill-defined, not seeing a lot of good dominance up here. In fact, you can see some fairly large put-dominated gamma even above us, and so we're not out of the woods yet. We need to see a lot of calls go in here today and into early next week if we have any hope of the bulls pulling the nose up. If we don't see that, it could be further downside. So that's it for today. If you liked the commentary today or have any questions, come join us at gammaedge.us. That'll take you to a blank sign-up page. We know we're revamping the website. Click on the pricing tab, fill out the blanks, and come on in, join us. 14-day free trial, no risk to you. Follow us on Twitter, Gamma Edges with an S, and then here on YouTube, of course. If you like today's content and think I'm on the right path to help you out, smash that like button, give me that immediate feedback, and then of course subscribe so that you can be notified next time Taylor or myself post something. So with that, I bid you farewell. Make it a great Friday, make it a great weekend, and hope to see you in the Discord. Thanks, everyone.